Hey there, welcome to Neppy Invest. In this video, I'll be focusing on 8 ASX stocks that I have put onto my watch list for a potential buy in the short term. So when I'm referring to the short term, I'm talking about time frames of a few days to maybe a month or so. And the main reason these companies have been put onto the watch list is because of technical signals. So I'm looking for some sort of patterns in the chart. So if you don't like looking at a company's charts, this may not be the video for you because I'll be looking at a chart every single slide in this video. So let's get stuck into it. And what are the 8 companies I'll be looking at in this video? So the 8 companies I'll be talking about today include a few companies I've already discussed in past videos and a few I haven't discussed at all. So they include Pushpay, Clinuvel, Northern Star and Resolute Mining, both gold companies, Vista Group, Flight Centre, MyNet Fone, which is now MNF Group, and Blackmores. So let's talk about the first company, which happens to be Pushpay. So with most of the companies I'll be focusing on in this video, I'll be showing you 2 charts, a longer term chart and then narrowing in on shorter term. And the main reason I'll be narrowing in on the shorter term is so you can see more clearly why these companies have become of interest to me and why I've put them onto the watch list. When you zoom out, I really like to zoom out 1 year at least, but I really like to look at the 3-year, 5-year, 10-year chart of most companies because you can get an overall picture of how the company has been performing over a longer time span. Now with Pushpay, the first company I'll be focusing on, the first chart I'll be showing you is just the 1-year chart, and a couple of things you can see in the 1-year chart. Now the share price low during this period was of course during the low point during the COVID-19 financial panic, which was almost 1 year ago, the low point, and the share price was lower than 80 cents. And then the share price rapidly increased from 80 cents all the way to a high of $2.20. And that was the first of a double top. So a double top is just the share price reaching the highs, just a bit of time frame between those two, and that usually is a sell signal. And from the second double top, which was reached in October, the share price did go through into sort of a short-term downtrend, got down to $1.40, hit the uptrend, and then has bounced off that, and it looks like, or it wants to start developing into a new uptrend. And you can see that when I show you the next chart. So the next chart I just want to show you for Pushpay is the 4-month chart. And what this 4-month chart does is breaks down from when the share price was in that short to medium term downtrend to $1.40, and then from $1.40, which was the uptrend, and I've just noted the uptrend with that sloping black line, we have seen the share price potentially form a new uptrend, and we have seen a higher low, which is the first sign of a potential new uptrend, and all we needed was really a higher high, and right now we are potentially getting that. The most previous higher high, or the most previous high, was start of February when the share price got to around $1.72, $1.73, and on March 17, the day before I'm doing this video, the share price did zoom through $1.73, or that high. So that is the new potential higher high. Could be coming soon, and that could be the breakout in the share price. So that's the main reason Pushpay has been put onto my watch list as a potential buy, because of this potential breakout that's happening as we speak. So the next company I'll be looking at is Clinuvel. Now, Clinuvel is a company I've been following for many years, and I have never bought a parcel at all. And over the past year or so, it does seem like the company has been trading in a bit of a channel between about $20 and $28 or so. Definitely $20 is a very powerful support level. You can see the share price has reached that price level about 4 times in the past 6 months or so. It reached it in September and then November. Got close in January and then again towards the end of February. Now, towards the end of February, they did release their half yearly, and that did put a bit of a rocket up the share price, and we can see that in the next chart. And then we did get the high of $28 back in June of 2020, but the share price did get to about $40 a few years ago. So this was a hot stock for a while a few years ago, and it's just been consolidating ever since then. So potentially, particularly if the share price gets above $28, this could be the start of a new uptrend. I do like this company, and that's the reason, another reason why this company has been put onto my watch list. So next, I'll just be focusing on the last 4 months for Clinuvel, and the share price low during this time was at their support level at $20 on the day they released their half-yearly results on the 24th of February. Now, I've seen this a few times in February where the market reaction to the release of the half-yearly or yearly report was muted or a bit pessimistic on the day they released the report, but then the day after, it seems like the market takes time to digest the report. The day after and subsequent days from the day after, the share price really takes off because it seems like it takes a bit of time for the market to truly digest the reports of companies sometimes. And this is exactly what happened to Clinuvel. The day they released their half yearly, the share price actually went down through support at $20, and that looked very negative. The next day, the share price just zoomed up, and in 4 trading days, the share price went from $20 to $25. That's a 25% increase in a very short period of time. And you can see increasing interest in the company as well, because on those 4 days where the share price increased, there was increased volume as well. So that was definitely a breakout of the share price based off the half yearly. And that's exactly the sort of thing I want to see when I buy a company. So this is why this company was put onto my watch list, and also why I actually did buy a parcel of this company. So next company is Blackmores, and in this case, I'm just going to zoom out a little bit further and go to the last 5 years. So in this case, we'll be looking at the weekly chart. The main reason I want to look at the weekly chart is because this company was a darling of the market about 6 to 8 years ago. I remember Blackmores sold we'll say a large chunk of his shares to buy out when the share price was about $20. And then the share price went from $20 to $240 in a few years. And that is an argument you could put forward to why directors selling large chunks of their shares is not necessarily a bad thing for the future of a company. Now, ever since that high of about $240 about 6 or 7 years ago, we have seen the share price just going backwards. I think they've misread or misplayed the China play. That is just an opinion I have at the moment. I don't really follow this company too closely, but there are signs that the share price might be turning around right now. We have seen the share price get to a low of $60, which was reached twice, which is a double bottom, and those double bottoms were reached during the COVID-19 financial panic in March, and then it was reached in about September of last year. And ever since that second bottom, the share price has been rallying, and they did put out a fairly optimistic half yearly. Now, just focusing in on the last 4 months for Blackmores, and that half-yearly report that they did release on the 24th of February was the impetus, was the catalyst for the share price to break out, it seems like. The market did like it. There was high volume on that day. So unlike Clinuvel, which did see a fairly muted response from the market, there was a definite response from the market on the day they released their half-yearly Blackmores. It went through resistance about a week or week and a half ago at around about $82.50 or so, and then has pulled back in the last few days. So if it maintains above that resistance, which now is support, that will be quite good and quite healthy for the future share price appreciation. So this is the reason why I've taken a little position in this company, and if it does hold that resistance or that support level, I will maybe buy another parcel. Now on to MyNet Fone, which is now called MNF Group. Now I'm going to have a hard time calling them MNF simply because I've always known them as MyNet Phone. I've been following this company for about 10 years or so. I have been a shareholder on and off with this company. Share price has not done much over the last 4 years, so I think the market is on and off with this company just like I have been. But there has been signs since they released again the half yearly that there could be potential new uptrend developing, and you can see that when I show you the next slide. Now to the shorter time frame for MNF Group and looking at the last 4 months, and there's no confusion to how the market reacted to the release of their half yearly on the 23rd of February. The market absolutely loved this half-year report. I was very interested to see how the market would react because I did like it, but sometimes if I like a report, the market might not. So this was the perfect sort of one-day candlestick to buy into a company. Share price went from the low the previous day, $4.20 to $4.80. So that was a significant rise in the share price. Some people will be very hesitant to buy in on that sort of rise, but ever since then, the high for that day was about $4.80. Their share price has kept on rising. That's the sort of share price action you want to see after a company releases this sort of report. You want to see the share price sort of consolidate for a little bit of time, form sort of a flag or potentially a pennant, and then the share price rise from there. And we have seen a little bit of an increase in volume over the last few weeks or so, and this is the main reason this company has been put onto my watch list. I didn't buy a parcel. I really should have on the day they released their announcement, but I was trying to be a bit too cute, be a bit too patient. But I believe this is a good potential buy for the medium to long term. Now on to Flight Centre, and this is what I'm going to talk about in this video is probably true for a lot of these travel stocks or recovery stocks from COVID-19. And I'm just showing the 16-month chart here so I can encompass the period including the financial panic during COVID-19 when the share price of Flight Centre went from $35 all the way to about $8 or $9. And ever since then, the share price has been recovering at a very slow and steady pace. And right now, you can definitely say the share price is in a new uptrend when you just look at the daily chart. Share price has got to about $20. Now, the one thing I want to mention here is because of that dilution, because most of these companies did big capital raisings, because of that dilution, a lot of the valuations of these companies are now higher than they were before the COVID-19 pandemic. So even though the share prices are still a long way off from those highs before the pandemic, the valuations of these companies are actually higher because the shares on issue are significantly more. So I think everyone should keep that in the back of their minds if they think this is a good recovery play. I even believe some of these companies have even higher debts than they'd had before. I believe that's true for Qantas. So I actually am not going to play in this area, these recovery play, because particularly with these travel companies, simply because of that reason. I believe the valuations of these companies has been distorted because of the high dilution from capital raisings. But just because I probably won't be buying these sort of companies doesn't mean you don't have to. So the whole point of doing these videos is to share some ideas. And when you look at the last 6 months, you can definitely see the share price in a good uptrend and potentially even a bit of ascending triangle developing here. And the share price is right at the top of that triangle. And if it pushes through $20, that would be very bullish, in fact. So even though I'm saying I won't buy, actually the chart looks quite bullish. Now on to Vista Group, and this is another company that was quite affected by COVID-19, but even before COVID-19, the share price was under a fair bit of pressure. I'm not sure what exactly was happening, but the share price went from $5.50 to about $3, and then now affected by COVID-19. So if you don't know what this company does, they provide some sort of software to movie theaters, cinema, that sort of thing. So you just through that factor, you can see why they were affected by the pandemic. Share price has been recovering, and when we zoom in the next slide, you can see that the share price is breaking out, and in fact, the share price is starting to increase at a more rapid rate. So I do think there are a few people interested in this company, but this, like the movie theater cinema sort of business model, is under threat at this point in time. There are some movie production people, companies who will be streaming all their content online for this whole year, and that's the sort of business model they want to bring forth in future years. I'm not sure if that's going to play out, but it is getting rid of that sort of middleman, that movie theater cinema sort of part, getting rid of that. They believe they can make more money. I'm not sure how that's going to play out, but it does raise questions to the movie theater cinema business model. But I do think a lot of people do like to go to the movie theater to watch a movie, especially a big action movie with lots of other people. I don't necessarily like to do that, but a lot of other people do. Now, I just want to show you the 9-month daily chart for Vista Group. And the reason I want to show you 9 months is because The most recent high at $2 was reached in June 2020, and we're getting close to that right now as I speak. In fact, I just looked at the share price, and the share price was around $2, so it was up 5% today on March 18. So this chart is showing you to the end of trading to March 17, and this is a symmetrical triangle that was broken. There was a breakout to this pattern towards the end of February. So this symmetrical triangle is, all this is showing you is the spread between the high and the low in the share price is narrowing, and what you want to look for is a breakout to the upside or downside. And we had that breakout at the end of February at about $1.60. That would have been a good time to buy. I wasn't really following this company at that point in time, but the share price has grown to about $2 last time I looked, and that is the high that we saw in June 2020. If it moves through $2 on good volume, that would be another bullish sign to buy into this company. The next two companies I'm going to show you are two gold mining companies, Northern Star and Resolute. And most gold mining companies are under pressure right now with the share prices. And we've seen the share price has been under pressure for a few months because gold prices are going down and the Australian dollar has been strengthening. So with these two companies, I'll be just showing you the 1 year chart, or it's actually, in fact, it's about a 14-month chart, because all I want to see is in that 14 months. And the main reason I'm interested in both these companies, Northern Star and Resolute, is because the share price right now is exactly the same as it was during the height of the COVID-19 financial panic. So Northern Star got down to $9 back then, almost a year ago, and right now it's $9 from a high of 17, which was reached in November. So this could be a low risk buy. It could be a double bottom and a low risk buy. If the share price falls below $9, just a sell out. And then on the upside, you could be buying at a very good value right at this current price. Now with Resolute, I've just zoomed out a little bit further, just so you can see the double bottom. Actually, I shouldn't call it a double bottom just yet. We need confirmation that it is a double bottom, so I'll call it a potential double bottom, so you can see that more clearly. So the share price in March of 2020 got down to 60 cents, and then it ran hard. You can see it went from 60 cents all the way up to a top of $1.50, and then it's come all the way back to 60 cents. So this is another reason why sometimes a buy and hold strategy is not the best of things, and a most definite downtrend with this company right now. So has it reached that double bottom? Well, remains to be seen. So keep an eye on this one. If the share price starts to turn up, if gold prices start to turn up, maybe the Australian dollar starts to become weaker, this could be a good time to buy Resolute Mining. Now, since I've shown you two gold producing companies, I thought it quite prudent wise to show you what's happening with the gold prices over the last few years. In fact, this is the gold weekly chart over a 7-year period. And the main focus is looking at the last 2 or 3 years, because gold prices have been in an uptrend since late to middle of 2018, a very well-defined uptrend. And the most interesting thing in the last few weeks, that uptrend has been tested, and there is signs that the price in gold is turning up again, just signs. So this, we'll say short-term downtrend in the gold prices perhaps is coming to an end, and is another potential reason that Northern Star and Resolute Mining could be a good buy right now. Now onto the gold daily chart. So this is looking at the last 18 months. And the first thing you'll notice here is the rally in the gold prices from about December 2019 all the way up to its peak in August, early August 2020 at $2,080. Then ever since then, the gold prices have been trailing backwards. So you could say or call that a short-term downtrend in the gold prices. Now, the gold prices did test a support level at about 1770 late in November, early December, and rallied off that. So I thought that could have been the bottom in the gold prices, but it wasn't. The gold prices started falling again, and then it went through that support level on fairly good strength. So that support became resistance, and then it tested the next support level, which was at $1,680, and the gold prices again have rallied really hard off that and have continued to climb each and every day. So what I want to see in the future with gold is that support level at 1,680 to be maintained. We don't want to see the gold prices to fall through that, and ideally I want to see that new resistance level at 1,770 to be broken on the upside. That would be fairly bullish move with gold. So I hope you've enjoyed this video on some ASX stocks that I've put onto my watch list for a potential buy in the short to medium term. If you have any comments, leave in the comment section. Otherwise, I'm not a financial advisor, so if you do need any financial advice for your own circumstances, make sure you seek out someone who is qualified and can speak to your own financial needs. That's all for this video. Have a good day. Bye.